All right, welcome back. It is time now for your call of the day. Wells Fargo downgrading Morgan Stanley to underweight, which, as we know, Jim, is the Wall Street speak for sell-ish. This is Mike Mayo. It's a lot of attention. Your take on the call?
So we know Mike Mayo. He's a friend of the show. He's a very dynamic analyst. He always says what he thinks. When you see an underweight or a sell or whatever, you often think there's something wrong with the company. That's not what's going on here. I mean, I've read his note, and I don't think any of us are looking around at Morgan Stanley and seeing there's some flaw there. That's not what this note is. This note is simply saying that the re-rating in the multiple on the back of a lot of things that are coming to fruition has run its course. Now, I do think that Mike could have taken it to a neutral or something like that, because that's what generally the analyst community does when they feel like, hey, it's just ahead of its skis a little bit. But it's Mike Mayo. He doesn't pull any punches. So I get it, but I just want to make clear, this isn't like go out and short Morgan Stanley. That's not the idea here.
Just underweight, right? We always call Morgan Stanley a bank. Is it, Rob?
I have an asset management.
I know. I don't like the term bank is overused. It's
right.
not like I'm going into Morgan Stanley and putting a deposit down and getting a toaster.
Right.
I mean, this is a different type of company.
Right.
To your point.
Yeah, I think also you have 15 years ago, you had so many different wirehouses. You had so much. You've had such big consolidation, and I think if he's calling it for a valuation, I mean, really comes down to it's J.P. Morgan. Is up, what, like 85% over the past 5 years. I think Morgan Stanley is about 50. So it still is like J.P. Morgan, if you're going to own one bank, has been the one that's treated investors the best. And then there's somewhat everybody else I'm saying, not from a fundamental, but from a stock perspective, J.P. Morgan continues to be, I think, the one that people want to own.
But let's look at the why here. We don't own Morgan Stanley. We own Jefferies. And as much as we want Rich Handler to be right about the IPO market being open, he was talking about that a couple weeks ago. Market activity and growth fears like we're seeing today do not help that in the short term. And yet, I think this is very interesting. Most of the financials remain above their 50-day moving average, which means they are still technically in an uptrend, which is one of the reasons that's surprising us that this is not kind of spilled over into something more broad, and it is healthy. I mean, I think there's, when you think about people that need to get money to work, they just sold a business, they're on the sidelines, they're moving in. You use volatility like this to take advantage and get money to work in areas that are attractive. So.
But again, to my earlier point, there we go. You look at the KRE, it's almost like they read my mind, or at least my emails this morning. The KRE, the regional bank index, down 3.5%. Don't want to make too much of it. It's up 8% over a month. But there's a very big difference, Jason, between, and I'll just, you're a Philly guy. There's a big difference between a PNC and a Morgan Stanley.
100%.
And they're not even the same,
right.
But we call them both banks.
Yeah. And for me, we don't have exposure to Morgan Stanley, but, as I look at financials, as private equity and investment banking are the areas that are of interest to us. So we own Goldman Sachs, we own Apollo, we own BlackRock, asset manager, right? So as I look at interest rates and obviously what's going on there, I think about loan demand. I think about that increasing potentially. I think about credit quality, which has been reasonably done well over the last couple of quarters. So I'm not terribly concerned about that. And I do think when I think about IB and I think about 2025, I think underwriting capital markets activity has bottomed. I think we will start to see an upswing coming into 2025.
Does that benefit a Goldman Sachs?
Absolutely, it benefits a Goldman Sachs and it benefits a lot of the players in that space. It benefits private equity as well.
I mean, Goldman is down 5% right now, Jason.
It is.
But somebody on the street is like, oh, it's not going to benefit Goldman Sachs, right?
Right. And I mean, that's markets sell-off story, right? But it's still
and to be
up
fair, everything is selling off.
Right, but it's still up 24% year to date.
Yeah.
Right. So I think the story is still very much intact. The Fed will cut rates in September, and I think some financials, especially as idiosyncratic stories, will catch a run. Well,
it's a good opportunity to tease my good friend Leslie Picker, because on Monday she's going home to Kansas City. Shout out to Leewood, you know who you are, and interviewing Jamie Dimon. Jamie Dimon's got that bus tour. I think it's the 14th annual bus tour. Leslie will be speaking with Jamie, probably have a promo graphic for it. Cue promo graphic. And it'd be really interesting to hear what Jamie Dimon has to say about the consumer and bank. Or it's Wednesday. Thank you. I got the guy right and the host right, but the day wrong. But it's 66% correct, so I'll take it. All right, look forward to that on Wednesday. That'll be a big deal.